So you're going to use the built-in mic?
Yep. Yeah, we'll be able to hear us. All right, everybody. Woo, I'll have your attention, please. Woo. Welcome, welcome, welcome. It's Tuesday night, January 16th, 5 p.m. local time here in Bali. Time for The Filter. Sorry about the late start. We had a few technical difficulties here in our new space, but are you guys comfortable? Is this going to work out? We got like, I think, 30 or 40, more than 30, 60 in the room. So thanks for coming out tonight. It's a big night. We got a very special guest in the house with us, Mr. Willy Woo. Let's give him a big hand. He's the local boy made good, right? He's been around the world since last time we saw him, and he's going to share with us hopefully a story or two, and then what he presented at the Consensys Invest in New York City.
Show and tell.
Sound good? Show and tell, all right. So we're going to get straight to that, but if we have time, we're going to also do a little bit of analysis of what's going on in Indonesia. There's been a lot of activity from the Bank of Indonesia, and a few official statements have come out, and yeah, we'll parse that a little bit, and if we still have time, I've got some more tricks up my sleeve, but let's see how it goes. We're getting a little bit of a late start, and when we finish, we're going to convene at Kismet for a little more informal discussions and more beer drinking, I hope. All right, let me share my screen with the folks at home, and we'll get this party started.
Are they hearing us okay?
All right, everybody at home should see what we're seeing here. And let's kick things off. This is the filter number 132. What is the filter? We get together every week and try and figure out what's going on in the world. It's getting pretty complicated these days to figure out exactly what's going on. So it's a group effort. It's a group conversation. You guys can chime in. We're going to figure this out together. That's the idea. Let's see here. Let's take a look at the price here over the last week. You see that? This is corresponding to the beginning of our meeting this morning, or I'm sorry, this afternoon. Got a precipitous drop in the Bitcoin price. We've talked a lot about this, the futures market recently, and I don't know if you guys have seen this lately, but the Chicago Mercantile Exchange has got the Bitcoin reference rate. Every day they publish a Bitcoin price. Yesterday was 14,000, but because we're in the land of Bitcoin, today the real-time price is less than 12,000. Welcome to the world of crazy volatility. Those who have been around for a little while are used to it, but it's still a little bit shocking when you see $2,000 moves in a single day. Of course, whenever Bitcoin goes down, you see a lot of red in this column right here. Woo! Holy smokes. How many people, where's Tether? How many people are in Tether? Where is Tether? Is it?
28.
Oops. What did I do? What did I do? Hold on. There we go. 28. Tether. Tether's up. All right, so everybody who's in Tether, you should cash out now, get your dollars and run.
It's up against US dollars.
All right, so let's not waste any time. Let's get on to Will's presentation here.
So soon.
Yes, you're. All right, guys. So just by way of introduction, Will was with us here in Bali. Was it 2 years ago, 3 years ago when you first came to Bali?
2014. Well,
2014.
2007, but I
And
met you guys in 2014.
he was the. I don't have your slides up
You
here.
taught me everything I know.
Can you remember where your slides are? They're at Ubud.com/. What's the rest?
Just hit it.
There it is.
One down, yeah.
And Will was the first person to tell me that the blocks were filling up. Now, at the present rate of growth, we would have full blocks, and isn't that interesting? No idea that was happening. I had been paying attention for quite a long time. I thought it's no big deal. They're just going to figure it out. And of course, we've had all the drama we've had over the last couple of years. And anyway, Will's technical chops are very insightful. And I think this presentation is no exception. So without further ado, you're going to have to talk pretty loud, Will.
Okay.
Let's get into it.
Let's have a look at this. Can you guys hear me okay? Yeah, so every year from this one forth, do you guys know about Consensys? Consensys is run by CoinDesk. It's the #1 conference everyone goes to in the blockchain world to mingle. And then they spun off this thing, which is Consensys Invest. And that was in November, just recently. And it's more pitched for the investors, more the fund managers and the Wall Street guys. And it's the first year they did it. And so I asked them, what shall I speak on? And they said, there's going to be 1,000 hedge fund managers in the room. They're all very financially savvy, and we want you to sell them on crypto so that they can put their December bonus checks into cryptocurrency. And over the course of that conference, Bitcoin price went from, what was it, 9,500 to 12,000, and ended the week at shy of $19,000. Where is it? Here we go. So this is my talk essentially, and feel free to chime in. I've done this presentation with friends just around the room before I went on stage, so just feel free to ask questions and stuff. I gave them an intro to say where my background is, and I'm not a fund manager. I'm not a quant. I've never been trained in doing all the analysis stuff that the Wall Street guys do. And hey, Gary, can you turn off the rain, please?
I just sent somebody.
Oh, look, it just went up higher. So my background's in startups. It's a new technology, emerging technology, and for the last year, just over a year, I've been immersed in analyzing the crypto markets. Really, initially, it was to figure out the best way to invest myself, and I just started publishing it. So I started this blog called Ubud. I just said I publish brain farts, just my opinion. They're just solely opinions, okay?
It's not trading advice?
No, they're not trading advice, but Bitcoin's going to 11,000 and then 9,000, okay? It's going to do it real soon. And then, so yeah, I just gave them an intro of some of the stuff I did. So this was a funny one. Like I published the 3 cats in a moon pattern. This is how Bitcoin consolidates whenever it pumps. Bounce, 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 and moves on. Now, these patterns, it's like a sea of traders. They're all got their emotional kind of reactions to the market. And you find that in markets, they always behave similarly because we're all human beings. Like when it pumps really high and crashes, it always bounces up, and there's a dead cat bounce. And Bitcoin's got a different nuance on that. And this pattern repeated for 3 years till I published it. And then it stopped. But it happened to be the same time that the ETF failed. Do you guys know what the ETF was? It just allows stockbrokers to let you buy into Bitcoin through a trade, like a shareholding. It's just a shareholding interface into Bitcoin, and that failed to get accepted by the SEC. And but leading up to that, this is all around March, April, I think, so roughly then last year. Leading up to it, it got, for the first time, we got Wall Street Journal publishing Bitcoin as a legitimate investment vehicle and not drug money, not for laundering money. So we had a lot of money that came in during that time after the ETF failed. These guys started to buy up Bitcoin on the real market. And that added a new profile of investors coming into Bitcoin. Savvy investors, not the crypto anarchists, not the early guys. It was the first of the smart money. And that changed the psychological profile of Bitcoin's trading profile. And that fractal pattern ceased to work. And so, yeah, things change all the time in the crypto space. You can't come up with a hard and fast rule because it's always dynamic and it's always changing. We're undergoing some really large changes right now. In the last few months, as you can see, when the price goes from 10,000 to 20,000, there's something crazy going on. And I lost my slide. Okay, how do we, can the guys at home see that, or is it? So who thinks here Bitcoin's overpriced? Nobody. It's kind of a skewed survey, I guess. Who in this room owns Bitcoin? Who doesn't? Who doesn't own any crypto? People say hands, I take it. Oh, so people own not Bitcoin but other altcoins. Ah, interesting. One person doesn't own cryptocurrency in this room. Okay, good. That's interesting, interesting. So I put out this thing last year. It's called the NVT ratio. It's been quite widely published. It's equivalent of the price-earnings ratio in stocks. You guys know what that is? PE ratio? Yeah, so it's a very common metric that stocks guys and valuation guys do on stocks based on their earnings, but Bitcoin doesn't have any earnings. It has, it's not a company, apart from Roger Ver being the CEO of it. It's not really much other than a network. So turns out that you can look at the money flowing through the blockchain, and that correlates about 98% with the price valuation, the market cap of Bitcoin. And there's economic theory behind that, which I won't get into. But what you can do is take that money flowing through the network and do a ratio with the valuation, and it should be perfectly a straight line in a perfect static world where everything's perfectly valued. But it's not. It's, oh, we've got sounds. I'm going out to shout. Nice. Yeah. All right. We can turn up the rain now, Gary.
Oh, I see.
What's that? Yeah. So this is the ratio, and it's showing the deviation between the flow going through the blockchain and the valuation, and it should be perfectly a straight line, but it's not. So when it deviates up, it's overvalued. Down on the lower range, it's undervalued. When it's high like this in the early years, it's like of a early high growth company. You know, a lot of people are speculating on future value because it's growing so quickly. The network was growing like
crazy town in these early years. So this is one of the first valuation metrics based on real fundamentals and not anything else. So this one's been useful because it refutes people like Jamie Dimon, who says there's no fundamental, it's a Ponzi scheme. There's nothing actually, there's nothing of value and there's no activity in this stuff. It's just people buying into some fluffy internet thing. So anyway, where are we right now? In 2017, tail end of 2017, we're at 0.5% of the M2 money supply. M2 money supply is all the money in the world, cash, savings accounts, and check accounts. Long-term savings accounts as well, term deposits, that sort of things. So anything that's like close to cash is M2. 0.5%.
That's all crypto, or that's
I believe that's all of crypto. 1% conservatively, it's probably 1 to 3%, but conservatively, we have 70 million users. I'm pretty sure it's above that right now. We're between 1 and 3% of the world population owning cryptocurrency. That is equivalent of 1996 of World Wide Web adoption. Just turns out that the user base, not in the bubble zone we've got now, which is going apeshit, but over the long term, over a long trajectory of 10 years, the number of people buying that hold crypto doubles every 12 months. And this study was done through analyzing Google Trends traffic and the people searching for BTC USD. Typically, people who search for that are interested in the price because they're about to buy in or they hold it. The baseline growth of that is a very consistent doubling of every 12 months. We don't have exact figures on how many, but we know the growth trajectory is doubling every month based on that analysis. So if you run that through its course, in 9 years' time from when this was done, so in 8 years' time, half the world's population will own, in this case, Bitcoin, not cryptocurrency, just Bitcoin. And it turns out, yeah, within the next, I can't remember, I think it's 15 years, it's almost everybody will be on cryptocurrency. And so this is a chart of the value, market cap, the network value of Bitcoin. It follows this trajectory. And we're on track for another 4 years to cross M1 money supply of USD. So this is all the US dollars in cash and who knows this? Is it check accounts? Cash and check accounts, right? M2 is M2 is savings, check, and cash is M1, and then M0 is just cash, is it?
M0 is like base money supply. $4 billion base money.
Base money.
M0.
That's M0. Yeah. Okay. So I'm pretty sure this is money we use to spend, essentially. What's in your pocket, what's in your credit card, and what's in your check account. M2 is what's also in your savings and long-term cash term deposit accounts, right? So in 4 years, Bitcoin's network value, never mind Ethereum and all the others, is on track to cross the money supply of the world reserve currency, which sounds pretty ridiculous, but that's its trajectory. It's very small, right? It's only in the, we're in the 100 to 200 since this was published. We're up here. Billion versus 2 trillion. So we're 10 times out. But it's each one of these lines is a 10x value increase in altitude. So we need one more 10x to cross M1, which is quite ground shattering if you think about the implications. Because also, if you look at the volatility, just the amount of money is in this, it becomes this huge sea of money
and it doesn't shift like it used to in the early days where we had 50% shifts in one day, right? And it turns out roughly in this 22 to 24 period, Bitcoin looks like the stability of Forex, the Euro USD pair. So like your grandparents might be holding returns in some mutual fund or bond or cash, earning 1 or 2%, and Bitcoin will come along and offer probably by then 100% per annum. Currently it's 400% with the same risk profile. So at that point, it becomes very compelling for the risk intolerant investors to shift to this asset class. And so, and I'm just gonna, yeah, okay, I'll just touch on this. So this is a new asset class. Fund managers look at correlations between assets, and whenever I see an asset that is not correlated and it diverges, like if I own an airline company, I also want to own oil stocks, because when one goes up, the other goes down, and that hedges the risk tolerance for any one event, like the price of oil. And there's a whole theory behind it, but essentially fund managers are looking for these divergent correlations. It just turns out that crypto is a very divergent correlated asset. No other asset in the world is correlated with Bitcoin. For a lot of years, they haven't been able to get in, but it's starting to get big enough for them to get in, and the money these guys hold is around $10 to $20 trillion. And they'll probably allocate even 1 to 2% minimum into crypto as a hedge. That is almost, you have to do it, or you're a negligent portfolio manager. You're actually taking a risk, not hedging your other portfolio with crypto. So you can expect $200 billion to enter the space within the next few years, particularly this year. And does anyone want to hazard a guess how much money's come into crypto? From the amount of money invested in mining, the amount of money bought? Olivier?
20 billion.
Exactly right. Thank you. 20 billion. 10 times more money is coming in the next few years. So buy the dip. That's not investment advice. This is more of the same thing. We're 66% of the way to being a world reserve currency at scale. And this is the same thing. This is visualizing the volatility coming down, and around about here we entered the blue zone, which is the volatility of fiat currencies. And this is the bubbles, the circles, are actually the daily traded volume. That's how quickly it's growing. And it's already percentage points of the world Forex markets. World Forex markets are the biggest markets in the world. And Bitcoin's not the only show in town, as you all know. I removed a lot of the others to make this chart clear. This is Ethereum. This is Monero. This is Neo. They're gaining faster than Bitcoin, so they may even cross over quicker, right? I've only shown you Bitcoin, but there are faster gainers here, and you know, Ethereum's got pretty close to crossing over there on a log chart. It's still under right now. I'm not saying invest in this stuff. Yeah. Yeah, so when you're a hedge fund and you've got $500 million to sink your money in, you do not put it into Dogecoin. Right? You put $500 million into Dogecoin, the price goes crazy and you'll never get your money out. So they seek liquidity pools. They seek a coin that can swallow $500 million of purchase power, and they want to know when they want to exit. It can swallow $500 million of a sale and they can get their money back. So Wall Street and that 200 billion I'm talking about, they're going to seek the deepest liquidity pools
they can find, and that's Bitcoin and Ethereum. You can just go on Bitcoin market cap and sort by maximum traded volume, 24-hour traded volume, and you'll see Bitcoin today is trading at $12 billion. Hedge fund, that will swallow $500 million easy in one day. Ethereum is like, I don't know, something like a third of that, I think. So depending on the hedge fund, they'll seek the pool that can take, because definitely the high gainers are the smaller coins, but they can't get in there because it's too risky. I put this up on Twitter a while back. This is the 10,000 view of Bitcoin. So we had the dawn of the agrarian age as we migrated from a hunter-gatherer society to this newfangled technology called horticulture. And that created the first villages, towns, and empires. And we shifted onto our first use of gold as a store of value. And that's been out with us essentially for 10,000 years. Is gold in a bubble? I always ask, you know, is gold in a bubble? Is it overvalued for the amount of money that it earns in its dividends reports? You know, it's a store of value, and it's been in a bubble for 10,000 years because it's a store of value. And somewhere around 1973, we decoupled from gold. Yeah, hey, come on, hey. Yeah, we've got some really interesting people in the audience today. And so in 1973, actually, at the industrial age, you know, guys, you know what happened in the industrial age, right? Who's the oldest guy in the room? Gary, what happened at the dawn of the industrial age with money? I don't know. We had to, more or less, the Chinese were ahead of the curve. They did this sort of 600 years earlier. They also were the first to discover a lot of things like the printing press, which, you know, predates white man's history. But so China was ahead of the curve. But when England spawned the Industrial Revolution, we moved to a new type of currency which was backed by gold, but it wasn't gold because it was too freaking heavy to carry around. And that was paper receipts for gold. And it was necessary for a much more complex economy as we had industrialization. And it became electronified in the 20th century. And in 1973, we decoupled from gold. So we've been in a 50-year experiment with our money being digits on a computer, fully digital on some bank's database, backed by nothing. So we're currently going through a new revolution. It's a post-industrial revolution, and everything's going into a digital age. In 2009, we invented the first digital scarcity on the internet. That's Bitcoin. And so they called it drug money in 2013. 2017, we called it, well, the banks called it the bubble, big bubble. And I've got there 0.01% of the world was using it. 1% was using it in 2017, and they called it a bubble in 2017. We've got the first internet native digital scarcity. You know, you got the internet, and anything on the internet can be copied, except, and when you can invent a digital scarcity, you can eat the entire financial world with software, just like the entire real world businesses are being eaten by software. Biggest taxi company in the world is Uber. Biggest hotel chain in the world is Airbnb. The biggest media companies are Google and Facebook, right? So software is very powerful, and we've figured out how to completely digitize the financial world. Now, how big is that? That is roughly $30 to $60 trillion is in money, $80 trillion in equity, all the companies in the world. $280 trillion is real estate. And all of this will be tokenized and digitized and represented on blockchains. So we're 1% of the way there, and in my opinion, we're not in a bubble. This is like gold. This is the gold bubble. It'll reach 100%, and it'll be 100% till the next revolution. But I'm not saying it's Bitcoin, by the way. I'm just saying the entire market cap, the entire valuation of the crypto space is going to take up 100% of essentially all finance in the world. So then that's the long view, and where are we in this year to come? So this is the typical investment cycle of any kind of hype cycle, really. There's a stealth, awareness, a mania, and then there's a blow-off, you know. And in the stealth phase, usually the smart money comes in, but we never had that. We had the geek money. Only the cypherpunks bought it because they were mining it, and only the geeks knew about it. And the awareness phase started, I think, last year, when the smart money came in. These are the guys that were really understanding economics, and they started buying Bitcoins, and they were not technical. They were non-technical investors, very savvy in global finance. And they were putting their own money in because they were not putting in the money of funds of other people, because that was more or less risky or legal, you'd be fired to do so. And so we're about somewhere around here this year. We're at the very start of the mania phase, and the institutional money usually comes in this zone here, the awareness. They push it to here, and then they let the public take it to here. But because the institutional money is very late to the game, because of regulatory blockades, and because the liquidity is not big enough, they're in this area here where they have to compete with retail money, everybody, the public, general public. So they're going to be putting in money with the general public, and we'll probably see a very heightened mania phase, higher than normal. So you can expect this year the money to go, you know, the market to look crazy, and people say it's a bubble, but it'll still keep climbing before a blow off. It is. I'm pretty sure it's going to overheat, and it's already starting to overheat. It's going beyond what you would expect organically. But you never short a market when it's going apeshit. You never try to jump off here thinking this bit is crazy, because it gets crazier and crazier and crazier. So we've got probably 1 or 2 years for this money to come in. It's still early, and this is a general dominance chart, which I think a lot of you guys have seen. And actually, it's down at 32% today. So this was November, around here. So Bitcoin is losing its dominance, which should be happening, right? Like, all the world's resources and finance is not US dollars, right? Valuation is in real estate, equity markets, commodities, all sorts of stuff. So this is a healthy trend where money is flowing into new protocols, new kind of apps that are trying new businesses, and it's stealing market share away. It's not like it's stealing money away. It's more like more money is being printed because they're creating their new token, and more people are entering in to buy it. And you see that in Bitcoin price going up, but also altcoins going up even more.
Isn't this a graph that people use to say that Bitcoin is dying, or share to things like Bitcoin Cash?
Yeah. That's totally. It's Roger Ver and a lot of people that want to say Bitcoin is dead. They have their own opinion, but yeah, there's a lot of opinions that aren't really well founded on deep thinking. There's a lot of charts you can put up, and if you look deeply enough, it's not really what they're saying. Bitcoin's far from dead. I don't think it necessarily is guaranteed to survive, but it's got enough going for it that is probably the choice to put your money in. Certainly in a risk-adjusted term, the amount of risk you're taking for the amount of return you're getting, it's one of the highest from year zero, and it outcompetes. Risk return on Bitcoin's higher than Ethereum. Ethereum's outperforming it, but you're taking more risk. So it's still a very good asset class. It's still very relevant because we've got a lot of active development. We've got Lightning Network. We've got billions of transactions this network can take up once this. Sorry? Yeah, that's also misleading information. Yeah, it uses a shit pile of energy, for sure, but so does the Federal Reserve. It uses more energy to print our US dollars and spend it. And gold, at $8 trillion or $7 trillion, uses something like 5 to 10 times more energy. And on top of that, that's right now, because the block size is constrained. We can only put 5.5 transactions per second on this network. If I expanded the block size by 10 times, we would use 10 times less energy per transaction. And when Lightning Network comes out, it will facilitate billions, all the transactions you want to take on this thing. And the energy consumption of the Bitcoin network will be less than the US dollar printing, right? So, what's that? Oh, because, okay, here's the thing. If you look deeper into where the mining centers is to burn the energy, they are like bees to honey. They go to all the places where the energy is cheapest. And those places are where they're dumping energy. They are in, for example, Wenatchee, Washington. I visited them in September. They have 16 hydroelectric dams bursting at the dams. They can't get rid of the energy. So what do? You dump it into Bitcoin miners. One of the largest installations of Bitcoin mining is in Wenatchee. And this is energy that would have been dumped. So we're using it to process and secure transactions when we would have dumped the energy anyway. And then someone will say, look at this energy, and this is how much carbon footprint that energy would take, but no carbon was produced. China was using coal-fired power stations, but they wouldn't have shut those power stations down because shutting them down would cost more money than to keep them running. So they would have dumped the energy anyway. So they're using Bitcoin mining as a battery to store funds. It's overblowing that. And if you do the projections forward on the technology, it's not an issue. No. So this was like moving into, if you're a hedge fund manager and you're trying to maximize your gains, this is a plot I did of the top 125 coins. Okay, this is like the price that they started. I've normalized them, so you can imagine the price going upwards. I got the price today and I put them on the same point on the chart, so you can see where they came from. This is a trajectory of growth on a log scale. Every altitude is a 10x growth, right? So this shows you that all these guys that started below Bitcoin and now equal to Bitcoin is outperforming Bitcoin. So you can eyeball that and say like, oh, maybe 3/4, 2/3 of the top 125 coins are outperforming Bitcoin. So there's a lot of opportunity here to outperform Bitcoin. If you're smart about it, you can pick the right winners. Okay. This one? I'd have to pull up the real chart, but no, XRP's XRP would be probably that one because it's the second oldest on the chart. It might be this one. This is definitely Litecoin. Then this is the third coin. XRP is super old. Oh, Roblox. It could be Roblox. I'm not sure. Not sure. Roblox only mooned this month though. This was done in around November. Yeah, so it's probably not even on the radar. It was in the top 125 back then. Yeah. Yeah, so yeah, like that's an example of a technology coming out of nowhere. Got to watch for that. Seriously, this year, watch for it. We've got shit coming out that's ridiculous. It makes all this stuff look like dial-up internet. And we're going to move to fiber very soon. So don't get caught out with, like, Ethereum can only do like 10, 20 transactions per second. You're not going to change the world with that. You know, that's like trying to do Skype over a 1200-bit dial-up modem. Or, no, I think I said yesterday, that's like trying to do Skype over punch card tapes or floppy disks over SneakerNet, right? That's how slow the stuff is. Like one decentralized network will take up all of the transaction rate of all the 1,500 coins right now. Like if you were to create a decentralized exchange using kind of like doing 1,000, 10,000 transactions per second like we have on the NASDAQ, you're not going to handle it on these blockchains. So watch out. We've got technology that can do 1 million transactions per second coming out this year. And the world probably needs 1 billion. So we're not even there yet. That's not to say Bitcoin will die. This thing just needs to be a pot of gold you bury. You don't have to transact on it because this has got a lightning network above it which can do 1 billion transactions per second now. So this is a visualization of every single coin that we've got since its inception. And one is you bought it for $1 and it's $1 now. This little U curve. The vast average has, you bought it at $1, you sold it for $1 over 4 years. Maybe it did. Maybe you bought it here. Maybe it's like gaining slightly. It's marginally out competing S&P 500. If that. That's if you bought every single coin. So there's a lot of crap out there. Like that chart here, saying 2/3 outperforms Bitcoin. Definitely outperforms one. Being the same value, it's $1 is $1 now, and is when you invested. If you bought the entire shitcoin market, you're not making any gains. In fact, you're losing. You're down by 100-fold, and then in the last few years, you've got back to your $1 again. So don't just randomly buy because you like the name or John McAfee told you to buy it. Do some research. You know, I got a friend, I keep saying he's up, I don't know, 20,000x, some ridiculous amount. I'm sure he's going to be a billionaire from his few bucks he invested a few years back.
So, like, cycle looks like this. I mean, there's another cycle of this or the just looks like we are at the end of another like good cycle for now.
I don't think we can predict the future from the past necessarily. It's kind of, well, I think you can definitely look at trends, but then when a new paradigm hits, I don't think it's relevant. And I think that all of this stuff is early days, and it's not going to be relevant. There's only a few players in here that are going to be relevant into the post-industrial age when everyone's using this future of finance. And I can pretty much say majority of these 1,500 coins will not do another swing up I think it'll swing down and be made irrelevant. And there'll be a few survivors that will survive this. So the real key to this is due diligence. You have to be your own personal venture capitalist. You need to look at, if you want to outperform Bitcoin, by all means, just park it in Bitcoin and some of the top coins and just sit on it and get on with your life. But if you want to outperform Bitcoin, then you have to become a venture capitalist. You need to look at the market, you look at the need for it, you look at the ceiling, you can run valuations, you look at the source code, you look at the community behind it, you look at, you actually look at the core development team and you talk to them and you ask them deep, tough questions. And you figure out if they're kind of a FOMO coin, which is they've got a lot of PR behind it and it's going to pump, but there's no technology behind it. Will it be relevant in 5 years' time? If you do all this stuff, this is what my friend did. He was a one-man venture capitalist. He did all of that, and he got his 20,000x over 4 years. And so it doesn't take that amount of skill, but it takes some amount of skill to pick these guys that came out of the top 1,000 to get into the top 100 and into the top 10. And every day new ones are popping along. And I really encourage you guys to do this in groups if you're going to do it. You can't do this by yourself, it's just too much. Venture capitalists are not one-man bands, they are a full team. And what you're looking for is this. I call it the Falcon 9 rocket trajectory. This is the arc that your coin will produce, like Bitcoin and Ethereum and Monero and all the ones that win. The ones that don't win go up and then they fizzle out. But if you get onto this trajectory, you're trying to jump on this ride that's outperforming Bitcoin. And then when it starts to level off, you jump off it. You get your first 10, 100, 1,000x, wherever you feel, you jump off there. This usually takes 2 years, by the way. It's not instant money. You have to ride some dips. And then you can roll into the next investment, the next thing coming. And this way, I think, is actually safer than riding on Ethereum for the next 10 years. Because you're constantly looking at the market and what's relevant. Because what's relevant today might not be relevant tomorrow. We haven't gotten to the point where this stuff is cemented. We haven't created the TCP/IP. People say Bitcoin's TCP/IP of money, but it's not. It could be replaced. Ethereum might be the TCP/IP of smart contracts in the finance world, but it's not. It is being replaced. We've got Civic. It's written on Solidity language that sits on top of the Ethereum chain, and it's migrating to RSK, which is sitting on Bitcoin as a side chain because it's a more stable chain, says Vinny, who's the head of that company. But all these guys that are running on ERC20 tokens and are on Solidity smart contracts, they can migrate tomorrow to the next chain that can provide more capacity and more stability. Bitcoin, Ethereum's shaking because it can't provide the scalability. So just watch that stuff and have your own thoughts, because people say stuff, but I don't necessarily think even the smartest people in the room are necessarily correct. And like I say, this is all just brain farts. These are my thoughts. They're not right. They are definitely wrong. They are definitely wrong, but some of it might be right. So yeah, that's it. That was the conference, and that was my 10 minutes. We went a little bit longer here.
Other than the scalability of the technology and the overall market cap, which is to me either hype or speculation, I'm a total novice asking this question. What is driving the winners and losers in your perspective, other than just the scalability and just the volume?
The question is, outside of scalability and looking at the market cap, what is driving these coins? I think the question is, what are the key ingredients as to succeeding in the long term? Like, what will be relevant in 10 years? I think that right now, the biggest problem that is not yet solved is scalability. I think scalability is the biggest one, and it was similar. We're in 1996 in the World Wide Web, 1% adoption. Technology-wise, we're probably in the 1980s of the internet, 1970s even. And the first thing you remember of the World Wide Web when it became popular was we got to get more bandwidth. And every other month there was like, it's not going to scale, the solving's going to come down. And there was a lot of infrastructure built out, and we needed to get more and more and more speed as more and more people were using this stuff. And I think by far right now, scalability, but I think there's going to be nuanced stuff, right? I think that privacy is really untapped. So I think that we're going to go really fast in trying to solve scalability, and we'll go, oh shit, we forgot about putting privacy on the base layer. How do we do that? So I think we'll get this generation where we've got a lot of throughput, but we never got the fundamental ingredients as perfect. And maybe we'll go back and try and do that, or maybe it's set in stone like the internet we've got today, which is kind of shitty. It wasn't architected well, but we're using it anyway. I think that after that, we're going to have another generation of what I call usability, that we didn't think about this very well, and we will discover needs for the stuff that needs a rethink. To me, that's a little bit like going from a fiber network to a wireless network and going to a smart touch phone. That's going to be the final stuff that gets us to the whole world. And I think that because these things are stuffed down on the bottom, it'll be more like the thinking behind how do we deliver this type of usability? Like, what kind of smart contract environments do we need so that, okay, we do 1 million transactions per second. Oh, now we've got 1 billion transactions per second. But unfortunately, those 1 billion transactions per second, when I say transactions, by the way, I don't mean Lightning Network dumb value transfer. I mean smart contract transactions where there's a little bit more complexity in the finance processing. You know, and like that would be like, I'm putting a buy order for that asset. You see, when someone takes it, I'll take it. When someone fills it, I'll take it. Or even a multi-sig transaction is a smart contract. When two people sign it, then it goes. So these are very simple, basic, fundamental primitives for the financial world. And I think that we will go for scale hard, but I don't think people necessarily figure out that they'll go, oh shit, we've got 1 billion transaction capability, but 1 billion very vulnerable smart contract. And I think that there's a lot of rethink to be had about how we figure out how to do finance that are very open and very hackable. So I think there's a lot of that to be solved. And we've got 5 to 10 years, but right now the scalability is the crux, and a lot of the price of Bitcoin is actually determined by the scalability. You'll notice it's going down a bit right now. It's going down just like 2017 when it hit its transactional ceiling and everyone bailed into alts. And right now it's interesting because we'll hit that again and people are bailing into alts. Alts are getting dominance again. But meanwhile, we've got $200 billion wanting to find its way in, and they want to go into Bitcoin. So there's two impacts happening, and I don't know exactly which one will weigh the other one out. But all I know is the stuff is going to go up, and I also know that a lot of the stuff is absolute crap. The only legitimate use case for Bitcoin, crypto, right now, is store of value. It is fully legitimate to park your money in a cryptocurrency and store it there. I don't think it's legitimate to build the next pets.com on the Ethereum blockchain, right? Maybe Ethereum is legitimate because it's providing a crowdfunding platform to launch new experiments. But outside of that, I don't think any of this stuff is even getting close to what is going to win. Yeah. And don't necessarily look into blockchains as the one or be all. You can do all this stuff not on blockchains. They might plug into blockchains on the, like, for example, all these guys, like, I mean, apparently, if you're in San Francisco and you call a Uber cab, 1 out of 3 Uber cab drivers will tell you they're working on a crypto hedge fund, right? And there's a number of blockchain-based hedge funds, and they want to do, most of them are very centralized anyway, they're not even decentralizing it. But actually, why do you want to do that on a blockchain? You know, there's, like, if you look at the wallet technology that we've got right now, that can, like, things like Shapeshift and an Exodus wallet and Jax that can back on with no custodial risk. It wouldn't take much to write an API layer on top of it to run a non-custodial hedge fund on the wallet platform. It's not on the blockchain. And it actually makes a lot more sense. It's way more secure. When you build this stuff, you don't want to have a honeypot that everyone attacks, including a blockchain built on smart contracts, like the DAO, right? You could decentralize that. So to steal everybody's hedge fund money, you've got to attack everybody on the edge of the network. You have to, there's 100,000 people in the hedge fund, you have to steal 100,000 private keys. And that's very hard, and it makes a lot of sense to do it that way. So a lot of people are buying into the hype right now, and we are by all means in the World Wide Web of the hype cycle. When Kodak doubles its market cap because they put out a miner, that tells you something. And so we're jumping on a bandwagon, but it doesn't have to be sold this way. Yeah.
How did the hedge fund receive it?
Huh?
How did that group receive it?
Well, the price went to 20,000 after the conference. That is good. But no, they were listening hard. They were listening hard. Yeah, very much so.
You could give us a heads up next time.
I did. I posted it on the Telegram group. I said you had discounted tickets if you wanted to go. Yeah.
What are you talking about?
OneCoin, BitConnect, and Dash. They will go up against any bear market because they are Ponzi schemes. Look for ones that go up against the bear market, the Ponzi schemes. And get out before they crash. No, they're not my holds, but I hold Bitcoin. Unlike other people, I hold Bitcoin to buy into the next wave of technology. Most people buy altcoins to buy more Bitcoin. I buy Monero. I hold Monero because I think the privacy market is undervalued. I don't think that privacy is valued at 1% of the entire market cap, especially with the regulatory shit that's going down and the witch hunts and the banning of currencies, cryptocurrencies, as you're seeing in Indonesia, right? What's that? Wow, that's really surprising, but I know that in New Zealand, they've got a little, at least my bank has a little check mark in their terminal system, and they'll red flag you if they suspect you of being involved in Bitcoin crypto. And that's because someone we knew was told by the nice teller lady that, shh, don't talk about this around here, it's this dirty word, and there's this thing here, so I don't want to do that. So that's coming. There's going to be a lot of clampdown. And so privacy will be very important. It'll be one of the major themes for 2018. There's going to be a lot of privacy plays. Monero is the only one at scale, and it's the only one that's tested, and the only one other than Zcash. Zcash is pretty legitimate, but I don't like Zcash in that it is run by a company. And there's a head to it. And if a nation state's going after a private currency, then it's very easy to shut down a Zcash type structure. Plus a few technical things with Zcash that are not as, I guess, reliable, arguably private as something like Monero. So then I also like Decred because it's a governance play. Decred, it's like a top 50, no one knows what it is. But there's a lot of hedge fund managers, like not Wall Street, but crypto and VC type funds that understand the technology. They are buying into that, even though no one knows. And they're doing it for very smart reasons, because Decred is the first on-chain governance coin that we've got. It's doing what Tezos is promising. Tezos promises a self-upgradable blockchain. So we're going this direction. Whoops, we're going this way. Oh, we're going to need to do privacy. We're going to do privacy by default at the base layer. We've got to change our whole consensus algorithm to do that. They can do that. They can entirely upgrade their blockchain without forking and having a 3-year mudslinging match. They can decide as a community, vote on the blockchain, and do it in 2 months. And so I think that Decred will outlast in the intermediary terms, in that if they've gone the wrong direction, they can pivot and go in another direction. So that both Monero and Decred for my altcoins are a very long play. They're like, I'd hold them for three years, which is a long time in crypto. A lot can change in that. I think they're solid for at least that amount of time. And then I hold a whole bunch of crap. They're not crap, but you know, they're more speculative. Like Salt, I hold Salt, which is the first financialization instrument that we've got. You can mortgage essentially your bitcoins or Ethereum, and they'll give you a fiat loan, and that's really good in that. I can now exit my crypto, buy my house, and not pay the tax on the gains in crypto, because I haven't exited crypto. I've actually just staked it down and mortgaged it. And your crypto is going at 1 to 400% per annum, and the loan is expensive. It's 12%, I think. But you're doing ROI arbitrage. And it just so happens that so Salt is face value on their website when you buy it, it's $27.50, and currently it's around $10. Varies a lot, but you can pay your interest off in Salt. You buy it for $10 and get $27 face value, and you can buy the principal off using that too. So you can actually double your money doing that arbitrage. So when people start to cotton on to that, we'll see the gap between $27.50 and $10 close. So you've got a 2x there, and it's almost risk-free as long as the smart contract written on Ethereum is secure. And the regulators don't change their minds and shut the company down. Those are your 2 risks. That's it. I can buy Salt. I could buy Salt for $10 on Bittrex, and then I can get a loan. So I get $1 million of loan, and then I can buy less than $400,000 of Salt on Decred on Bittrex, and then I pay off my loan with it. Right, that's arbitrage. People are going to scoop it up on the market and put buy pressure and push the price up until they match. It's just like when Bitcoin's selling expensive one market and it's cheap on the other. It'll close. Yeah. I've taken a lot of time, Gary.
No, this has been great. Thanks for taking the time. Take it. Guys, thanks for bearing with us with the technical difficulty we had tonight. I know it was hard to hear. And we got a late start, but I appreciate you guys hanging in there. That's about all the time we have for tonight, but we're going to reconvene over at Kismet. And I think they'd be really thrilled if even half of us showed up over there. And we'll probably be able to hear each other better. We can connect a little bit, do a little bit of networking. Join us at Kismet. We're going to head directly there, rain or shine. And we do this every Tuesday night, same time, same channel, 5 p.m. local time here in Bali. Ubud is nice enough to give us the space to meet in. So we'll see you again next week. Thanks for coming. Woo!
Talking about the granny miner, low risk, low return funds.
The rates are
Bitcoin's going to give you 100% the same risk.